Back to the markets. Now, Target raised to the #1 position on Cowen's conviction list based on strong recent results and improved profit margin outlook. It is your call of the day. Now, Jim Lebenthal.
Sir.
This is a stock that is already up 60% this year. Yeah. It's at all-time highs. I get it. Everything in the call is true, but do you worry it's too late?
No, I don't worry that it's too late. It can be too late in the following context. You're not going to get another 60% gain. I don't care. And I see Pete over in the background there, probably seething as I say that. No. But look, I think you get the market return here, somewhere between like 7 and 12%. It's a fabulous company. We know that. But the fabulousness is priced in, and now you get the market return. There's nothing terrible about it, but yes, it's late.
And about a 25% upside at $130. They say that there's a rising bifurcation in retail, Jill. What they mean by that is you've got companies that are going to be able to manage through the tariffs, manage through supply chain issues, and then you got those who don't, and the ones who don't are going to suffer or die, and the other ones will pick up their slack and their customers.
The winners are off-price. The winners are
the TJ Maxx's, the Ross stores.
Right, online presence, and then the hypermarket, the big box, the ones that can retain pricing power. So I'm long Walmart. There have been times that I've been long Target. I know Pete's been long Target since 1942 when he was born. But those names continue to work. When you look at this list, the thing that concerns me is what they removed. Think about it. Their top pick previously was Ulta, which has fallen
sure,
from
but
grace.
It did have a heck of a decade run. To be fair.
But it has significantly fallen. So
by the way, put that chart back up, guys, that one with the 4 big retailers, because, Joe, I'm old enough to remember when tariffs were going to kill the retail sector.
Yeah. And the other name on this
look at Macy's, Nordstrom's, JCPenney. There's some debris there.
But there's their point. The companies that can manage it, the bifurcation is there.
But that's been happening for years.
It's the economy of scale for Costco, for Walmart, for Target.
But it's also the online presence.
It's also a margin story. So when you talk about the Macy's, the Nordstroms, they're more exposed to tariffs because the margin's not there to insulate them to that. Those that have effectively managed the transition, like a Target and a Walmart, from a brick and mortar to an e-commerce business, I think are the ones that have been the beneficiaries and are doing so well year to date. That is absolutely no surprise.
Do we like Boot Barn? See it on the list? BOOT?
Floor and Decor, an IPO, they're on that list, up 97% year to date. Brenda.
Yeah, I think outside of tariffs, for brick and mortar retail, it's about being relevant to the consumer. And so we are seeing that there are some companies, particularly Target is one of them, that has remained relevant to the consumer, Walmart as well. And so we don't own those. We prefer to play the strong consumer in other ways. We have Amazon, the payment processors, Visa and PayPal, another way to gain that same exposure to a strong retail market.
If you own Visa or PayPal, does that mean that you believe there is not a consumer-led recession coming?
It doesn't appear as though there's a consumer-led recession coming. The consumer continues to be quite strong. And so we're continuing to be positive on the consumer.